Exercise 8. Use the information in Exercise 7 to prepare an August 31st trial balance for special picks. Begin by opening the T accounts, then post the general journal entries to these T accounts. Here are the journal entries from Exercise 7. To post to the T accounts, we take each piece of information and store it by account title. The first piece of information is a debit to cash for $11,750. We draw the cash T account and store the $11,750 debit. The next piece of information is a debit to photography equipment. We again draw the T account and store the $50,525 debit. Next, we have a credit to Harris's capital account for $62,275. We create the T account and store the credit. Next, we have a debit to prepaid insurance. We again create the T account and store the debit. Next, we have a credit to cash. We don't need to go and create another cash T account as we've already created the account. We simply store the $2,400 credit. Debit office supplies $2,233. We create the T account and store the debit. We then have a credit to cash $2,233. We return to the cash T account and store the credit. August 20th, we debit cash $3,500 and credit the revenue account photography fees earned. We create the photography fees earned T account and store the $3,500 credit. We create the utilities expense T account, storing the $873 debit, and then credit cash for $873. The next order of business is to calculate the ending balance in each of our accounts. In order to calculate the balance in the cash T account, we add up the debits, in this case $15,250 in debits, subtract the total of our credits, and we net the two together. Since the debits outweigh the credits, we have a net debit balance of $9,744. The rest of our T accounts don't need a total as they only have a single transaction. The format for a trial balance lists the company name, special picks, the report title, the trial balance, and the date for which the report is being presented, August 31st. We'll have a column for the debits and a column for the credits. We then list the accounts and their balances in financial statement order, listing the assets first: cash, office supplies, prepaid insurance, and photography equipment. Assets are listed in order of liquidity. We would then list any liability accounts. At this point in time, the company does not have any liabilities, so we proceed to equity. We would list the owner's capital account, and then, if she had had one, a balance in her drawing account. Finally, we list the income statement accounts, listing revenues first, photography fees earned, and expenses, utilities expense. We then total up the debits and total up the credits: $65,775 in debits and $65,775 in credits.